Hello everyone and welcome to another video. If you're new to my channel, my name is Meydan. I'm a fintech professional and I'm a finance professional, and I've been in the financial market since 2005, and also the owner of a fintech company, the founder of a fintech company that's calculating the future swing hours and the swing days way in advance, like weeks in advance. All right, so if you're new, that's what we're all about, and we're going to go over a few stuff. Now, in the previous video, recession-proof trading, I said I'd do a video on how to scale your account fast, and so let's do that now. And let's move me out of the way here. Now, normally, I don't like to use the word fast. So how to scale your trading account fast? It's like, forget the word fast, but let's say faster, right? Because normally what traders do, they'll take a trade at a time, okay? Or even if they're taking few trades at a time, they're taking it at a certain framework, like risk 1 to 2, 1 to 3, 1 to 1.5. That depends on the person. Obviously, consistency here is an issue, and this is why all kinds of software development companies are now popping up to do quant trading, and it's fair enough too. This is how you can trade without emotions. But the best way to really trade an account and to scale it up is if you know with a high level of probability that you are going to have a swing day on a certain day. And if you know the swing days in advance, and you've got the swing hours in advance, and you've got a pricing model, you are pretty much walking on 3 legs. I guess that's the best way to walk for a guy. Okay, but what I'm trying to say is that way you can scale your account much better. All right, and the reason for that is you've got time on your side when it matches a price. If it's a swing day, you can add to the position as you confirm the impulse is going up, because you've got targeting as well. All right, so this is why if you're going to scale your account fast, you've got to kind of like think outside of the box a little bit. And remember, all the videos that I'm doing here are all based on my evaluations on time and price. So I am not using any other method to scale the account. Basically, I want to know what is a good day to trade, what's a good time to trade, and what's a good price at that day, at that time period. Okay, and when we have all that, then we can add into the position and so on. So a few things first, right? With everything in life, you got to be consistent. So trading is no different. In fact, you have to be really consistent here. But time and price pre-calculated with a swing day, swing hour in advance is already giving you a lot of consistency, because you're not going to trade on other days or other time periods. Even if you're trading on a non-swing day, it will be based off a swing day, which is where the scaling in comes in, which we're going to take a look at in a minute. The second thing is, obviously, you want to protect your capital with strong risk management. Okay, we're not risking a lot of stuff, we're not risking a lot of percentages, but if the trade is going in our direction, we definitely want to take advantage of that. We want to like add on there, because if it's an A plus setup where you got a swing day, swing hour, and a PST price, especially on a weekly or a daily, you just want to like get in there and load up. You can also do that on the next day once an impulse retraces. So that way you'll have to, when you're adding in, what you're doing is increasing your compounding at a sharper rate. So your linear line is like kind of going up exponentially, right? So your growth is kind of having periods when you've got swing day, swing hour price. It's going to be like boom up, exponentially going upwards, rather than a steady way. We like steady, don't get me wrong. This is why I don't like the word fast in trading, but taking advantage of time and price is really important. Okay. Then you can gradually increase this position size by adding on, because you got the direction right. And remember, having the direction is not enough. This is why with the PST indicator, which I'm going to show in a minute, we need to have a good realistic target. Okay, and we need to add on accordingly to that. If you have time and price on your side, you are not going to be emotional. okay, because time and price gives you really a lot more discipline than many other trading methods. First of all, with other trading methods, you don't know what day is a good trading day. You don't know what day the market is highly likely to turn from a bottom or a high. You just don't know that. Okay. Plus, you don't know what time it's going to happen. Are you going to do it in London? You're going to do it in New York? You're going to wait 24/7 in front of the screen? Are you going to have a team and work, I don't know, 3 shifts a day with 3 guys looking at the market? All of that is on you. But if you got swing days, swing hours, you know exactly what day to look out for a trade. You got the price for the week, the month, the day, and plus you got the hours of the day. Okay, now this is bingo style trading, and even let's say we got everything wrong, your risk is very small, which we're going to look into that as well, which is also very, very important if you're going to scale your account. Because scaling your account is not just maximizing profit, which everybody focuses on, but I like to focus on tight stop losses. This is why daily trade hours are really, really important, because if you know the hour, then you know, okay, this is the time when we should be going up, right? And that's it. If you are wrong, you don't want to be in that trade. So your stop loss doesn't need to be too far out. I'm going to do a demonstration on that on the euro dollar, because today, while I was doing today's video for the club members, I actually entered the euro dollar trade exactly right in the middle of the video when I was doing the euro dollar trading. You can see that on YouTube tomorrow, actually, because I put the videos up after a day or two on YouTube. So, you know, ensuring you got emotional discipline, also quality over quantity. You don't need to trade thousands and thousands of trades. Now, quant traders do a lot of trading sometimes. In fact, I've met a Dutch guy, and they said, listen, in a day we put thousands of trades in. I was like, oh, that's interesting. So I said, when do you do it? Well, when we get the data, and when the data matches our technical indicators. I'm like, okay, fair enough. So everybody's got their own kind of way of cooking and eating what they cook, right? So with me, it's not like that at all. With me, we want to cherry pick and then add on into that direction once we've got the impulse and a retracement to add into. So the initial position is covered. It makes money. On the retracement, you add in and add in, and then you can go in that direction for days. Why? Because we know the next swing day, that's going to come up as well. Okay, so quality over quantity. Also, you avoid over trading and getting in and out all the time, trying to figure out where should I get in, where should I get out. You just take a step back, ask yourself this question: is it a trading hour today? When is the trading hours? Well, let's say today, for example, all right, this is the 5th and the 9th of May, right? So Wednesday's trade hours for Wednesday is like this. As you can see, I've got 6:50, 7:30 here. So if the market turns here, there's an opportunity for it to break out as well. But that level is a good level, okay? The 6:50 to 7:30 zone is a good level. And from there, there's going to be a bit of energy in the market. So that push can take us all the way into closing, and we'll have opportunity to manage the trade. Yes, okay, we can just follow it to 11 o'clock to 12 o'clock my time, which is when the market closes in any case. So what I'm trying to say is this: once we have the hours, you don't need to be trading all over the place, okay? So this is very, very important. You know the swing days, the swing hours, and you got pricing on your side. So take the quality stuff and don't stress. It's a 24/7 market. If you are trading alone in a 24/7 market, you are literally screwed up, especially if you're working during the day. Imagine you're working during the day and you're trying to trade. Knowing the hours, that's the best way to trade, because you know when the market's going to turn around or break out and make its move. Know when to take profits. This is really important. We're going to take a look at that with the PST indicator as well. It's just like really giving us how far we can keep adding and adding and adding, and how far realistically can we take that. Okay, if we know all this before, we can enter with multiple lots as well, as I've also done today with the euro dollar We'll check it out in a minute as well. So once you know where to take profits as well, you can, according to the swing day and the next swing day that's coming up, which we know in advance as well, and the hours and everything, we can manage the trade more efficiently. Also, if I know the next trade hours of the day, isn't that great? Because I'm not just managing the trade based on price. I actually know when the market might turn around. And do I want to stick around, or do I want to just take a profit and get out? Okay, so knowing that is an advantage. Now, how can it speed up the scaling? Well, because we've got information, right? Which days are the most likely swings? What hours are critical for entering and exiting trades? What price levels carry the highest probability of reversal and continuation? So once I have this information, which nobody else in the market has, but you guys at the globaltrader.club do have, all right, then you can scale in. Okay, so you got higher probability setups, tighter risk management, which is what I love. Okay, the minimizing of risk, that is more important for me than the profits themselves. And then you got less time in the market because you're focused. Okay, you don't have to stay in front of the computer and screen and exhaust yourself, and you can accelerate your compounding. Okay, so all of this is really beneficial for us. That way we can scale the account fast and also without the stress. A lot of traders get stressed out. They get stressed out because of the uncertainty. You never know what's going to happen. But with us, at least we've got hours. At least we know, if something is going to happen, highly likely it's going to happen at these hours. Okay, so knowing that already is like, okay, it's good. All right. So as a conclusion, with time and price, we're going to be trading less with less stress. We're going to be trading with more precision because we've got time and price with swing days. So knowing all that is good for us. And if we're in the middle of nowhere, we don't need to take a trade. Okay, and now that's the overall article, right? So which you can go and read that now on the website globaltrader.club in the blog area. In detail. So how we're going to do that now, I'll keep this there like that in case I need to go back into the timing, and let's open this as well. So these are Wednesday hours, and up above as well we've got Tuesday, which is yesterday, and then we've got Monday. As you can see, these are the swing hours, UTC +3, as you know. Okay, it's my time zone. And below we've got Thursday and Friday as well. And in fact, I've put the full months up there, as you know, in advance, right? So we've got the full month of May, and in fact I'm working on June currently. So let's take a look at the euro dollar, and we can take a look at anything you want actually. If there's something specific you guys trade and want me to take a look at, we can do that too. Let's first take a look at the swing days. Now from last week, let's take a look at last week, right? So if I want to go and check out last week. Okay, so that's last week, 28th of April to the 2nd of May. Now these are the this should be swing days. Okay, so let me just edit that. That needs to be swing days. It's obviously days because you got the days there, so I've made a typo there. So those are the swing days. All right. And these are the trade hours. Okay, so we can save that now. Now last week for Monday, for the euro dollar, we had Monday, Wednesday, Friday. Okay, so if we go back now to the daily, let's view this post properly as well. If we go back to last week on the chart as well, and just bear with me, so let's put that there. On the daily, this is where it is. Look, that's your Monday. We're at the highs. Market sells off into Wednesday. Now remember, if you're following me, right, you guys know the target zones as well. So we're always going from one zone to another. So that's your Monday, that's your Wednesday, and that's your Friday. Now look at Friday. Market comes into our green box. It's in there, and then it goes bang up. Now Friday was a swing day, And this week we had Monday as a swing day as well, and this is exactly why I've got a arrow here as well. So Friday, Monday being a swing day, every time the market comes down, we want to go up, and our PST indicator is supporting us. And yesterday I said, if the PST indicator breaks above the weekly pivot, on the pullback, I said you can go long. All right. So if you haven't watched yesterday's video, you can. It's on the website. The reason I said that is because yesterday the PST price was on 13.28. I think it was just under the weekly. So I said, guys, if we go above the weekly and the market doesn't sell, on a pullback, we need to go long. So all you have to do is, after the breakout happened here, which is at a trading hour, look at that, the market breaks out at the trading hour, comes back into the next trading hours, all right, and then it goes all the way up into these trading hours here, okay? So if you know the swing days already, you know it's coming from, if you know it's coming from Friday, and then I've got 5th of and the 9th of May here, and then I've got Wednesday here, and on the swing days here I've got Monday. So all I have to do is also on a Tuesday too. These are the trading hours. So if I know we broke out, look what happened at the trading hour. Market takes off, it goes to the next trading hour, comes back into the next trading hour, and in this zone we're going all the way back up into the next trading hour. I mean, knowing all that in advance is the best way to scale. I don't know, you guys tell me. All right, okay, in my opinion, that's the best way to go. Today as well. Now today I took this trade right in the middle of the daily video, because in the club area, as you can see here as well, every day I also do a video. So Wednesday I put the hours there, this is Thursday, and this is the video for Wednesday. All right, so that's Wednesday. Now what did I say, guys? I said we've got room to go up on our PST. Now look at the PST indicator. It's giving me red dotted lines, right? These red dotted lines have a price tag on them, and they are not regular price calculations that you would see on a technical chart. These red dotted lines and these red dotted lines are completely different. This is based on price. This is based on time. All right. So then I've got here 63, 62. Here is the zone, right? So I've got 1.1411. I've got 1442, 43. So I've marked in those levels in the morning in the video, right? And when I entered the trade here, I said I'm going to cover the trade here. Okay, like I said, you can watch that video tomorrow. It'll be on YouTube. So the trade is already covered. Now I've got one more position open. All right. Now that position I'm expecting and anticipating to go up there. Okay, and if that happens, great. Now what do I have to look out for? Well, I've got to look out for the trade hours. Look, 11:40 here, and I've got 3 o'clock here, and it's my time, 2 o'clock at the moment. All right, so I also want to put 6:50 to 7:30 and targeting 11. 6:50, let's take a look at 6:50 is going to be there, and 7:30 is going to be there. Right, so this zone I've got to keep an eye out for. Now if the market, I've got to check out my book as well here. This is 3 o'clock, so until 3 o'clock, okay, it's going to be a little tricky, but the trade is already closed half a position, because I opened 2 positions. One has already covered the trade. So even if this trade goes bad, we are covered, but I'm expecting it to go higher because we're coming from a swing day and we bought at the low of the day. Why? Because if you take a look at the PST indicator again, you will note that the market bought on this red line, which is 56.58. Now that is a price of 1.13258. So if I go to today's low, 13258 is right there. This is exactly where the market bought twice. And look at the trading hour right here. And I got into the trade while I was doing the video here, Why? Because that was a trading hour, and I did actually say in the video, it's not a bad hour. This is a good hour. We're close to the lows, and in fact, I was going to put the stop loss below 13.25, but I said we don't need to. Why? Because if I got the hours wrong, we don't want to be in that trade. So I only had a 10-point stop loss, which is exactly this level here, and I did not move the stop forward yet. Okay, I didn't move the stop forward, but since the trade is covered, I'm all relaxed. Okay, and because the timing, if wrong, we don't want to be in there. We've got a tight stop loss. If things go pear-shaped, we're okay with it. Okay, but anybody who traded in yesterday, okay, comes down, goes up, can add on. You can scale into that. If the market comes back down here, you can scale into that, okay, with a tight stop loss. And that's the whole idea. You've got minimum risk here because the PST indicator is giving us pricing. It's not just an indicator. It is an indicator with a price on it. It's saying, listen, if you're going to get into the market, if you're going to buy this baby, you better do it today at 56.58, which is that price I just mentioned. So if I do buy there, the targets are going to be 62.63, which is giving me a target of 14.11 and 14.43.42 zone. Okay, so I already know when I'm going to buy. And when do I have this information? At the beginning of the day. The moment the new daily bar opens, I've got that information. So then all I have to do is say, well, okay, if the market comes to this price at my trading hours or at close trading hours, let's go, let's do it. And this is stress-free trading because you've got a price, you've got a time, you've got a swing day, and you're just following through. All right. So this is really innovative stuff. And anybody who's trading with a bot, sometimes people ask, well, are bots profitable? Look, nobody's going to sell you a $29.99 bot, and that's going to be profitable. It's just not going to happen. Okay, you can't buy a bot for $20 and expect it to be great. You can't buy a bot for $500 and expect it to be great, because there's a really good book by one of the guys who wrote, it's not The Disciplined Trader, Market Wizards, the writer of Market Wizards, and I had I listened to his podcast the other day, and he was talking to these really great traders, and it's really interesting to listen. So he said there, listen, these guys who are making a lot of money, at one point when they see that their strategy, their edge isn't working, they're out of the game. They just get out. Okay, so bots won't work all the time. It'll work for a specific period, for a specific condition, but the swing days and the swing hours, they will always work if you match it to a price. Even if it goes the other way and we were wrong, it's because of a breakout, with a breakout scenario. But a breakout or a turnaround, those are the only two things can happen. And if you're playing on a turnaround like we are today, you don't want to be in that trade if it breaks the other way anyway, because we're following a swing day. We want to scale in and keep pumping it up and up and up until we get to the targets. Okay. Now the same thing with gold. Now remember today, this week, look at gold swing days. We had a Friday and a Monday. So when I think I was doing a video, and in the middle of the video as well, I did another buy trade on gold on Monday, which was right here. I think I was doing the recession-proof trading video because I had done the morning video, and I said this is a place where we need to get in. Now look, the trading hours are here, so why am I not getting in when the trading hours are happening? Because I'll explain to you why. All right, when I did the video, I said, guys, if this thing, this thing has a breakout potential, okay, there's volatility in the market and I'm expecting disruption in the market. So knowing this ahead of time is already bingo, all right? I wonder if I mentioned that here on the Tuesday or the Monday. Let me see. No, I haven't. Okay, I haven't, but in the video I did. I said Monday, it's going to be, we're going to have a volatile day. So what I did was I entered the trade literally just underneath the weekly pivot, and I said it's not the best place to enter a trade because I don't like to enter under the weekly pivot. But because the trading hours were done, and after all these bars, the market didn't go down. So I said to myself, I'm expecting disruption in the market. In fact, yeah, I actually gave the hours for that as well until 3:30. I said we could be going all the way into New York with this, and this is exactly what the market did. So I entered there, explained why I entered there in gold. That took a profit and it just went up. Okay, so after that went up, comes back down into the trading hours again of Monday, and we're going back. Now look at the trading hours here. This is Tuesday Asia session. Bang up, bang down, and we're going again. All right, so all of this again, trading hours on Tuesday, and the market bangs down. Okay, so all of this is pre-calculated. I posted the whole of May in on the 22nd of April, I think, or the 21st or the 20th, somewhere around there, like 10 days before May. So knowing these hours in advance is already giving us a good edge. Okay, and with gold now, look where the market went. It went up to a price target, okay, which is logical. Okay, it didn't go up there, but it went up to a price target. So knowing the swing days, you can scale in pretty much into a target there or there and just keep pushing up. So that's really important to know, and this is how you can really scale your trading. If you know the swing days, this is from last week. Market falls down, and I said we can be bearish into the green box. Once again, look, we're in the green box. It's a swing day, Friday, Monday. Damn, just go with it. Okay, and it's just a good day because you know the good days to trade. And that's really, really the whole idea. If you get your swing days right, if you get your swing hours right, if you got a price like like on a PST, it's like magic. I'm going to improve the PST as well. I'm working on it. I'm going to really refine it. I've got a few ideas on it as well. It's just going to be something much, much sophisticated than what we have right now. What we have right now is already gold, but I'm going to add a specific aspect to it, which is going to be like bang, 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 follow through. For scaling, it's going to be really good. All right? So the same thing with SP 500, guys. Anything you want to do with the swing days. Okay, so I said this could be a high or a low, but you can see, look, on Tuesday, where the swing day for SP 500, you see the market is not where I want to sell. So the price doesn't match the swing day. So I said this is sticky, If it comes up into here, if it matches a PST price on a daily and during the day, I've got an intraday swing hour for it, I said I'm okay with it. But other than that, there's nothing to talk about because the market is not where I want to sell. If it is not where I want to sell on a swing day, look at something else. We can look at something different. Okay, so this is why swing days and swing hours are really good. You don't have to trade every day. You cherry pick the good levels, the good days, and you scale in, and you can knock it out. Also, I talked about that challenge we did, remember, in the beginning of the year, where I took the account, it was a small account. It was a $100 account, from $100 to $800 in like 6 weeks. Remember that in the beginning of 2025, I said, come on, let's do something where we can like challenge our trading a little bit. And that was a small account as well. So growing a small account, also scaling it up with time and price is much, much more logical than just trading the good old-fashioned way, taking one trade at a time, trying to make money. A lot of the times when people take one trade at a time, you'll see them saying, look, I'm not losing money, but I'm not making money, because you've got to scale in, but you've got to scale in at the right time, right day, right price. I hope that helps. Any questions, dramas, you can always shoot through. Remember, I'm trying to build Adea into a fintech, so we can have a company where we can actually grow it into a hedge fund or a software as a service. So we can have like I don't know, we can maybe have the first hedge fund as a community rather than individual hedge fund managers. We can have a community hedge fund. Who knows? Anyway, have a good day and good luck with your trading.